Hello, everyone, and welcome to the Real Estate DeFi panel. Today, we are lucky to be with industry leaders and a newcomer to the industry, and hopefully more of you in the room will join us. We're going to start by introducing everyone, please. Let's start here.
My name is Tyler Vinson. I'm the CEO of ReTokens, or ReTokens. We go both ways. And we're a real estate-focused tokenization platform, investment management software, and building low-friction pathways to secondary ATS trading for real estate security tokens.
Thank you.
Hi, my name is Natalia. I'm the founder of Propy. I've been in the space since 2017, tokenizing real estate in a different manner. We're not doing fractional ownership, but instead we're tokenizing one asset at a time and selling it on-chain. And we also do traditional title and escrow services, being licensed in several states here in the United States. My background is coming from software engineering, but also from real estate development. And being a child of a post-Soviet Union, I'm very, very passionate about making real estate a seizure-resistant asset. So thank you so much for having us today.
Hello, my name is Mitch DiRaimondo. I'm from SteelWave Digital. I founded SteelWave Digital as kind of like an under of SteelWave. I'm a crypto native. I founded a hedge fund in college that traded volatility in the crypto space. And through that, we saw the good, the bad, and the ugly. Graduated college, and I went to my father, who was the CEO of SteelWave. And I was like, look, I think we can access a completely new market for you and really be kind of the backbone of this whole real-world asset push if we could bridge your real estate into it. And he went into it full force. We just announced a fund today that's going to be fully tokenized. We're super excited about. And yeah, we're going into it. Traditional mindset coming into the DeFi space. I'm probably the youngest guy at the company by about 25 years, so it's nice to be shaking it up a little bit, and we're super excited about it.
And the announcement was the fund you launched today.
Yeah, it's a $500 million fund out of Bermuda, basically international investor wanting to come into the U.S. for distressed real estate asset, office, basically what everyone's running away from. And we gave them the option to tokenize it. We're like, look, once you get it in, consider it a traditional raise up front, but once you want to tokenize it in the future and bring it to secondary market, we're happy to facilitate that for you. Though it's kind of forcing the hand of traditional finance into the digital realm.
Congratulations.
Thank you so much.
Last but not least.
Hi, everyone. I'm Ed Nwokedi. I'm the founder and CEO of Swan CRE. Very happy to be here. We started Swan in 2018. We specialize in commercial real estate investment properties on institutional level. Prior to that, I was a executive director at Cushman & Wakefield, so that's kind of my interest for getting into tokenizing real estate. We have about $4 billion worth of real estate STOs that we're trying to sell right now, so we're really excited, and we just obtained our license with the SEC as a FINRA member.
Thank you. Well, we introduced everyone. The panel today is about DeFi and real estate. So let's start by asking, which chain are you on, and why have you chose those chains? Tyler.
We primarily work with the Polymesh blockchain. It's a public permission blockchain with regulated node operators. And a lot of the things that are done in the smart contract layer can be done in the layer 1 on the Polymesh chain, and we think for regulatory purposes that's going to prove to be advantageous.
And how do you find the DeFi ecosystem on Polymesh? Is it active, liquidity? How is it today?
I would say underdeveloped in general, yeah. So, dealing in the securities world, as you know, there is a lot of centralization that we're working on. So I would just kind of leave it at underdeveloped.
Natalia?
We're on Ethereum. When we do transactions of NFTs changing hands between two wallets, which means ownership actually changes the hands, we're using Ethereum smart contracts. And the reason we chose Ethereum, because of the smart contract settlement capabilities. And then we use Base since recently, since December, when we launched our new project called Propy. The speed and the cost, of course, it's outstanding after the Duncan upgrade. And the most important part, I think, it's not only the chain speed, security, and being an EVM enabled, but also the community and the chain leadership support. It's been a fantastic partnership with the whole Coinbase ecosystem. I know some folks are around, probably out there, but it's been a tremendous, really journey to work together with several departments, and we're looking forward to also capture their community of institutional players that would come and tokenize the properties, building NFTs and bringing more liquidity between REITs.
So before we move on to the next panelist, tell us about the keys. Tell us about your NFT, and I have a few questions about it. I got my NFT for my house, but we're going to get into that a little bit later.
You got the address?
Yes.
Yay, fantastic. Anybody else? Did you get your home address?
Put your hands up
NFT?
if you got your home address on Propy.
Awesome, a couple.
Okay.
So you can go on Coinbase Wallet in the browser, find Propy or type propykeys.com. You type your address or any address in the world, and you can mint it on Base for only $5 in Propy tokens, and then you have a reward from the wallet. So that's part of our partnership. But what it means is that you can buy and tokenize any address in the world, which is kind of a fun way. We call it RWA Monopoly game. It's a fun way to own your address, whether you rent or own the home, in your wallet.
So I bought my brother's address as well. How is he going to get it from me?
Oops. What? You got my address?
I bought my home, but I bought his home on an NFT. I own his NFT. How can he reclaim it? How can he say, this is my address, not his?
Yeah, so you can basically, look, this whole room also, their addresses are free, so you can buy a lot. And the reason it's so fun is because you actually have an incentive to now go to your partner and say, I got your address, but you know what? If you want to reclaim it and put your deed on chain, you get a reward.
And
so you
I
get
lose my $5.
$50, you get $50 in Propy tokens as a reward.
For me.
Yeah, it's coming
Okay.
for you. Then your partner has to upgrade and prove that he actually owns it. It costs about $100 in Propy tokens. But the beauty of this upgrade, it's called Tier 2 upgrade, is that we actually verify that it's the real owner, and we put the deed automatically on chain, on Base, and IPFS, entirely encrypted, so the privacy is protected. And then, you know, so many hacks have been happening in the recent years with counties where we cannot trust anymore the deed data storage. So there are actually services that are Web 2 services that are selling this service for $300 a year to have like another private entity to store your deed. So we do it on chain in a decentralized manner. And then if your partner also decides not only to keep your, their deed, but also create their property NFT, RWA NFT, that could be used as a collateral in DeFi, that's the second part of our topic today, then you get another $100 reward.
Very cool. Mitch,
So it's time for you to share more to your partner.
Yeah, I mean, we haven't gotten there yet. We haven't chosen just because we spent the last 12 months kind of going through the traditional financial hurdles, call it what you want. We domiciled in Bermuda to do a completely traditional LP raise. Most of our primary investors are probably going to be sovereign wealth, pension funds, big time money. And then once they're in, we're going to go, okay, now we're going to give you the option to fractionalize your ownership. I think at the end of the day, we'll probably be utilizing Solana or Ethereum.
But one question, why blockchain then?
For us, it makes it so they have liquidity, right? In a traditional real estate fund like this, there isn't one, right? There's options, like you can go to get a REIT, but you don't have really direct exposure. You could go to a private REIT, but your lockup period's massive. And for us, a private operator, we're mostly just doing joint ventures with your huge capital players, right? So this whole blockchain technology really opens that door. It makes it so anyone can step in, especially international players, to private, big-scale developments, right? Our smallest development's 150 million. Our biggest is $3.5 billion, right? So that's hard to just go raise from retail investors.
What's your smallest investor?
To this fund, it's 50 million. What we hope to do is raise $50 million slugs, right? Get it deployed. And then the investor will take, $5 to $20 million pieces of each of their investment and tokenize that and bring that to the retail market.
Interesting.
For us, it's a timing thing, right? We see a massive market depreciation in real estate, probably some of the best buy-in periods we've seen in 40, 50 years. At the same time as there is a bunch of demand internationally to get safe haven assets, specifically dollars, right? Assets denominated in dollars. So for us, we're like, look, let's not get ahead of ourselves and miss the opportunity. Let's get the money deployed, get it into these assets, and then bring them to the secondary market and tokenize it. Also, that way we can control the timeline, right? If you're going out to try to buy an asset, in ours, right? $100 million asset, you have 30 days of due diligence, then you have an acquisition period, right? And it's quick, take 60 days. Well, if you don't have guaranteed financing, it's quite difficult to go through that entire process. So if you already own the asset and then you can bring it to tokenization, that's kind of where we see it, especially on a big scale. And when we first started, Ed, you were our first, we came to you first, right? We did La Tijera. It was that deal down in LA.
Exactly.
And we brought it, we're like, hey, let's do it. We were gung-ho on it. And we realized, we're like, all right, well, this might be a little bit more difficult than we thought, right? It's not a small, single family home. This is, a multi-cap stack deal where there's different cash flows, different priorities, debt, go down the list.
To address the liquidity question, you're going to have large investor QIBs or 20 million and more.
Right.
How is that going to create liquidity for anybody who wants to buy one of your tokens?
I mean, hypothetically, and Ed, you and I were just talking about this, it's really taking it and going, okay, these positions, which previously you had to be a big capital allocator to get involved in, now they're fractionalizing it so anyone could put like $5 to $10 into it, right? But if you're trying to fill up a jar of sand, right, it's called a $100 million deal, and it's just straight sand, that's a lot of small kernels. Where if you have a couple big rocks in there, it's easier to fill the small kernels in, which is your retail investors. And that's really how
I understand it perfectly well. We went the exact opposite way than you did. Worked out well for us. Ed?
Actually, Remy, can you a little bit, I know many folks are here are still learning about real estate tokenization, but could you share a little bit about RealT and how fractional ownership tokenization is different from other types of tokenization?
Did you miss my speech before?
Yes, I did. But
Okay.
I see many folks just arrived, so a little bit of recap.
Thank you. I will do that, but I want to give Ed the chance to explain his blockchain and why and where he's going. And then I'll talk a little bit about me. I like to do that.
Thanks, Remy. Yeah, so we started with Ethereum just because that was kind of the main blockchain. Then we moved from Ethereum to Polygon, which is EVM compatible. And now we're kind of branching off into blockchains that really have an ecosystem that we think will be beneficial towards our distribution channels. So we're focused on blockchains like Stellar and Hedera. We have relationships with them. We like the way that they, first of all, we can mint a security token that meets all the standards of SEC for compliant issuance. And all the actually capabilities that are necessary for providing a security from one person to the next through our broker dealership. So, those are partners that we work with right now, and we're looking for maybe one more chain that we can go with. Really, distribution is a big part of our decision making because we have a lot of shares to sell right now, and it makes sense to have partners who want you to sell those shares within their ecosystem.
Thank you. So I'm the moderator, but I'll make myself a panelist just for this short minute. RealT, for most of you who heard before at the speech, we're a fractionalization tokenization platform. We've tokenized over $110 million worth of real estate, 1,900 properties. We have a very active community, fully DeFi integrated. And that's about me.
On Ethereum.
We're started on Ethereum. We went on Gnosis. And we're now with new CIP from Chainlink. We will be completely EVM compatible within the next 3 months.
Awesome, fantastic.
So we'll be on any EVM chain, and I believe that blockchain in the next 5 years will be just like your email. You will not know if it's STMP or HTMS. You will be able to go from one chain to the other, but that's a whole different discussion. So Taylor, have you done any deals? Have you tokenized anything yet? What is it? Tell us about your offering.
Yeah, and I'll just talk about one of our most recent tokenizations. We have about a dozen real estate projects coming on platform over the next 60 days or so here. And those range from, you know, a tower in downtown Denver to a small townhouse project. Recently we've done a Class A storage facility, so a lot of the, you know, traditional type real estate, you know, pieces. We tokenize for third party. That's what we do. Our model is to, you know, once they set up their, you know, their security, their private placement, we mint the security tokens for them and put it on blockchain and give them an investment management platform to be able to raise capital with, manage their investors with. And right now we're in development on some tech that will launch in June that will really allow them a low friction way to plug into the secondary market or the ATSs, and they can use their own issuance platforms, or we'll white label for issuers as far as them wanting to tokenize. So different funds and things like that, we can really get them set up with tokenizing all their assets, giving them all the software that they need.
When you mean getting them set up, walk us through this.
Yeah, so the way the process works is the first thing we need to do is get the legal green light. We actually are working with a couple of attorney firms, but we've got some AI software that the attorneys can train their securities documents with, and it allows them to create an entire securities package in, you know, seconds once they fill out the questionnaire and hit submit on there. And then at the same time, it will configure the security tokens, and we can put them on blockchain. And of course, they got to go through KYC, AML, all of those types of things. But that's what we mean by setup.
Cool, very cool. Yeah. Natalia, tell us more about Propy. Tell us about your journey up to now. You started in 2017. You're one of the OG in the space. Tell us, present Propy in a few words, please.
Absolutely. Well, before that, I just wanted to kind of mention that in real estate, there are really two types of tokenization. One is fractional ownership, which we don't do. And these gentlemen are doing that for different segments, different types of properties, commercial and residential, single-family homes, mostly in America, right? Then commercial globally in 3 continents you mentioned. Correct. And then you're about to do that once you build the fund.
All of our real estate's West Coast, but yeah, we're raising global markets.
And fractional ownership is absolutely legal, compliant. These are security tokens. Often I hear from real estate players, oh, we don't have regulation, legislation. No, it's the most straightforward way to actually bring real estate on chain. It provides a lot of democratization.
It's the only way. There is no way to sell real estate on chain without being a security token.
Yeah, and it's absolutely fine. There is one example that is trying to do it in another way, which I think we have a consensus that it's not the right way, but it's absolutely straightforward, legal. You have to pass KYC and AML if you're participating in this offering. At Propy, we chose a different path. We decided not to do fractional ownership, and instead support other players in the industry. We do tokenization by tokenizing the deed and ownership for one home at a time, where we sell a real estate NFT to one buyer. Very straightforward. You connect your wallet, see property, consent to become the homeowner. You see in the inspection reports, you can attend the home, and then click, 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 you own the home right away. And we also do title and escrow services. It's been almost 2 years since we received the licenses. Even if you're buying a property in dollars, not only in crypto, we are the firm that is closing the deal using AI and blockchain. The blockchain, the way we use it is really the smart contract for the settlement.
And then my deed will be on chain, right?
Yes, your deed will be on chain as well as with the county. So we do it in parallel.
Wait, as an NFT or a token?
It's an NFT.
Can I shard it?
Great question. In order to shard it, I will probably have an integration with RealT.
Looking forward to it. Ed, we're going to come back to you, Mitch, after, but Ed, now you're a broker-dealer. Big step forward. Congratulations on that.
Thank you very much.
Congrats.
What is the future of Red Swan now that you have your BD?
Well, you know, it opens the door now for many good conversations with institutions. You know, we've always have been thinking about working with institutions, been talking to many institutions. We work with, you know, clients like Mitch, who I look at being an institution as well. And, you know, the question always comes up is, all right, are you regulated, right? Do you have a license? And, you know, we tell them we're going through broker-dealers. We always had an entity where we had broker-dealers on staff that we can work with. But the problem with that business model is Red Swan wouldn't make any money if we let the broker-dealers sell it. They make the money and we don't, because we can't take commissions if, you know, we're not licensed. So we always knew we had to get a license. So we started with our IRA license, which is our residential registered investment advisor license. We got that in 2021. But the broker-dealer license now allows us to be able to trade both on the issuance and on the secondary market. And the way I look at it, you know, real estate is an institutional investment
When you
product.
speak about secondary market, is it active today?
No, you have to have first primary issuance before you have any kind of secondary. So, you know, you've got to crawl before you can walk. And, you know, we've done a great job, I think, of finding, you know, clients like Rich and others around the world who've given us really high-quality commercial real estate assets to tokenize and sell. We went through a down period, we all know, the past couple of years with all the negativity in the market. Really made it difficult for us to sell a large volume because we were focusing on the retail market, right? And we realized it's going to be hard to sell $4.5 billion at $5,000 a piece. So we had to kind of raise the bar. And now going to the institutions, we're getting business from them. So we have funds that we're going to tokenize for institutions, but also we look at qualified investors now being primary targets for our demand side. Because, you know, you look at pension funds, you look at insurance companies, all these groups are selling buying real estate on an annual basis in the hundreds of millions of dollars, if not billions of dollars. And it's, for them, it's just a matter of treasury management. And so we look at now being able to sell them a product that was typically unliquid, that's now liquid. So it de-risks that profile of their investment. And we think that this makes a lot more sense for them to buy. Rather than buy the same products they've been buying for the past 10 years, the Class A apartment buildings in all the major cities around the country, they now can buy that exact same product that has a liquidity concept to it, which makes a lot more sense. But the holdback was it legal, right? And
Always
so
is.
that was always a major conversation, and now it is legal. Now we do have that badge of authority that says we can actually transact for this and actually make you a higher yield with lower risk.
So when you speak about Mitch, you describe him as your client. But what's the dynamic between both of you? Clients, competitors, same ecosystem? How does this work?
I mean, the way I view it is we're kind of building it together.
Okay.
I mean, when did we met in what, 2020?
Yeah.
It was before I even founded SteelWave Digital.
It was after COVID, I think.
Yeah, I think so, yeah. So when I first approached Ed, we were bringing a deal to market that, you know, we needed a capital partner wanted out. It was a $60 million piece. Now, we didn't want to go shop around the market for it. We wanted to just kind of tokenize it, see if it worked, kind of similar to like Aspen Coin, what they did, right? And that's really where the whole interaction started. But
Did it sell out? Did it sell out?
No. No, the building flooded with the sewer, so that one did not sell. But win some, lose some.
Welcome to real estate.
Yeah.
I actually made 3x on the Aspen St. Regis token.
Oh, you did?
Yeah.
I was in college when that came out, and that was 2017, right? It was like kind of the first time.
Hold on.
I
hold on.
didn't
You were in
participate right
college in
away.
2017?
Yeah.
I feel like I'm a grandfather here.
Well, I started trading crypto in 2016, 2017 using AI to read the volatility. And we're like, look, a lot of these projects have nothing behind them, right? You could raise the hype cycle, trade it, make a bunch of money, get out. People lost money, people made money, there were winners, there were losers. But at the end of the day, it was, 95, 96, 97 of the .com, right? You couldn't really pick your winners and losers, but you could trade the whole thing. Now, I think with this next push, real-world assets coming onto the scene, you see different projects allowing that to happen. The next bull run is going to be a lot more rigid, where you can actually see your winners and losers. And from the hedge fund side, we're venturing more into a venture capital. We're going like, okay, we're bridging real estate to different protocols. Let's start investing directly in those protocols. And that's really where I think the space is going. And I mean, Ed, we talked about earlier with bringing in the institutions. The only way an institution's ever going to step into this space is if they have investment opportunity that they feel comfortable, the risk is controlled, and it's too good for them to say no, right?
Exactly.
And
For an example, his father, I remember when pitching to him, his father's like, what are we talking about? He had to bring Mitch in because he didn't understand, the way digital securities worked, which is really a big representation of the entire real estate market. It was very difficult to kind of let people know what we're doing with digital securities, but once he understood, he's really sold on it, and now you see what Mitch is doing right now.
Yeah.
But I think that to what he's saying about getting confidence is that now when you look at entering a broker-dealer network, that is how traditionally securities are sold, through broker-dealers. So you're now into a club where they can help you sell this product and share fees, which makes it more institutional, which is why we think that getting to this point is a major difference for us, because we can now share our opportunities with other broker-dealers around the world.
I got into crypto to avoid institution, to avoid all this. That was my motto at the beginning. But let's go back a little bit in DeFi. What are you looking forward as integration? What integration with DeFi, what protocol excites you the most? What possibility excites you the most?
Yeah, for me, it's the ability to put up the real estate security tokens or security tokens as collateral and be able to access liquidity that way, basically get loans against them. I mean, traditionally in real estate right now, if you're going to take equity via loan, you're having to lien the entire property. And not only does that put the entire property at risk on default, right, for foreclosure, but everybody has to play. To where if you're using security tokens as collateral, then you can just put those up versus jeopardizing the entire property.
You heard my speech from before.
I heard your speech from before, but no, as somebody that's been in real estate for the last 25 years and deals with everything from having to dispose of the property, right, or do cash out refis, it's long overdue for the real estate industry to be able to have an out like this. So for the DeFi, that's one of the most exciting pieces to me.
Natalia?
Well, there's a lot to share, and I'm very excited to see Milo here that is working on crypto mortgages. And I think that's the first step for our industry, the real estate on-chain industry, to really service crypto holders and allow them to get a normal mortgage at first, and then gradually get to the point of this outstanding innovation, which is DeFi, that allows for peer-to-peer participation. And that's what we're getting to. In the next 2-3 months, we're actually working on integrations with a DeFi protocol that would allow to use our real estate NFT as a collateral and get a loan against Bitcoin or Ethereum holding and the property itself. So it's double collateral, and because our NFT is not a security, it's easier to accomplish that first in real estate.
So walk us through the double collateralization. explain.
Yeah, so as I mentioned before, our main innovation, which is the NFT way of buying a property instantly, you connect your wallet and buy a property instantly via smart contracts. Because we have the LLC that is recorded in the county, so we don't have to come back to the county and record again. We change the ownership of the LLC. Now, if we add the loan component, what we're launching in a couple of months is actually a 2-year loan which the buyer can apply for when buying this NFT. So they apply for a 2-year loan, 11, 12% interest, and they have to bring their Bitcoin or Ethereum holding right there on the spot. They, of course, have to pass KYC and AML. Again, we're doing that instantly. And then within the next 2 years, we need to service this in a DeFi manner. It will be only for an investment property, so we avoid all the primary residences, mortgage licenses, complications. And of course, it will be a huge experiment, but I think it will lead to, again, to this path of peer-to-peer enablement. And potentially, I see integrations with protocols like Maple and Centrifuge, where truly it's the community that can build those pools of capital.
Nice. Mitch, are you even looking at DeFi, or it's down the road for later on?
I mean, my thesis in college was really focused around it and like democratizing finance, right? Getting rid of these massive minimums around private investments, specifically stuff like SteelWave does, right? You know, we signed joint ventures with massive capital groups in the U.S., you know, go down the list. But there's nowhere for your everyday person to play in that, right? Your private deployment rails. And I'm like, look, this opens the door for that. If we can really, you know, provide the real estate that people want to invest in, and then give them the investment opportunity to do that, it really forces the hand to really globalize a market that previously was pretty closed off. And again, like our minimum in this is 50 million to start with, and that was low to these guys. They're like, oh, that's low.
How do you put this on DeFi? What's your vision?
I just think at the end of the day, like the current system's archaic, right? And it needs to be revolutionized. And the way real estate is, it just says it in plain light. You know, everything's a paper trail. You know, go down the list of title insurance, all the other stuff like that. All this can be revolutionized by this new technology.
It's been revolutionized already.
I think on like an institutional scale, it can be revolutionized. Let's put it that way.
I think we did the inventions, but not the scale yet, but we're about to.
True.
Exactly. And it's interesting, I mean, internationally, you probably see this too. Like, when we have conversations with your big capital players here, they have no idea what we're talking about. But when we go have them in Singapore, Dubai, you know, they're asking very insightful questions of like, okay, well, how do you see this implementing here? Where do you see it going? What's your next exchange? Which is, you know, 5-10 years ahead of where the U.S. is now. And it's scary to see, but we definitely want to be on the front edge of it.
Very true. So I think that DeFi is, first of all, when we talk to customers, we're always trying to find a solution for them, a real estate solution, whether it be capital markets on the debt side or on the equity side. And so on the equity side, we're selling preferred shares so they can raise capital, so they can pull their equity out of their assets and deploy it into and buy more assets. We think that's a much better position than having an asset or having $1 billion worth of assets and having $300 million or $400 million trapped in that asset for 10, 12 years. That's, you know, total misuse of opportunity costs. But if you take, you know, DeFi, I think is the best asset for DeFi is actually real estate, because you look at right now, most of the assets of real estate are what you lend against, primarily around the world. So, I think it is even better with blockchain because, as was mentioned here earlier, that people, when you want to go to a bank to finance your project, they lock the entire asset down with a loan as collateral, right? But if you tokenize, like if I have a client with $100 million of shares, and they don't want to sell their shares. Right now is not a good time to sell your shares because the price point is probably not what you're expecting. But if you need capital, you want to borrow against what you have. So if we tokenize 50 million shares out of a $100 million asset, and the guy wants to borrow, you know, $20 million, and we took $40 million worth of shares and locked it into, you know, some kind of custodial account, and then he can borrow against that. he doesn't have to pay capital gains tax, for one, which is a big plus for the sponsor, but he gets to now borrow at a yield that he can afford, and when he pays off this loan, now he gets back his shares.
You say a yield that he can afford, but on a DeFi protocol, it would be an algorithmic yield based on the liquidity pool.
Based on liquidity pool, based on whatever the contracted yield is going to be. So if it's 8% yield that he wants, and he's putting his shares up, and his shares are paying out 10%, for example, as dividends, and he only has to put up 50% of what he wants to borrow, or 100% of what he wants to borrow, then all of a sudden it makes a little more sense to him than tying up the entire asset.
Okay, I understand.
Let me say this: I haven't done DeFi yet.
Okay.
That's further down our roadmap. Right now, I think the biggest request from most of our clients is raising equity, right? They want to raise capital. So we're using preferred equity as a means to raise that capital.
One thing I could hear from the panelists today is the consensus is their excitement is really towards collateralization of the token directly.
Correct.
Well,
I think the biggest thing
just
is
to put it out there,
money.
we have the technology when you need it.
I just think at the end of the day, it's like you need to have primary issuance, capital first. For us, anything under 100 million, it's not worth our time to do it, right? So we're like, okay.
Valuable time.
Well, if we can't scale, it doesn't matter, right? Especially on the real estate side, because the real estate returns, our fund is probably one of the better returning funds just because of the timing in which we're launching it, and it's only kicking off, high teens IRR, 8 to 10 cap entry point. So it's not like your crypto return, right? That's a stable, consistent,
8 to 10 cap in real estate is a very good yield.
Well, it used to be a 4 to 5, but
Yeah.
then, rates went to what they are. So now it's, 8 to 10. But that's really the window we see here. It's like, look, let's get the money involved in the system in very lucrative positions that institutional players draw their attention to, and then introduce the DeFi to them on a smaller, and then grow the scale up. I think that's really the only way to do it. And again, the only way institutional rails come in are if the risk is controlled and the assets that they're being traded, they actually have interest in, right?
Cool.
And the scale is the biggest thing for them.
Yeah, I think another point, and Ed touched on it, is even when you go to secondary market and you sell your security tokens, you're looking at a taxable event, where if you're just getting a loan against the security tokens, that's most likely not a taxable event. It just gives you a lot of flexibility.
I'm sorry to stop you. We're not tax experts. We're not giving tax advice.
Yes,
My
thank
lawyer
you
is
for
sitting
that.
in the first row, and I was getting dirty look.
Yeah, no tax, no legal advice either, right? But no, I mean, as a professional real estate investor, that's kind of what you're doing, is moving money around a lot of times, and the tax picture is so huge, like Ed pointed out. So the ability to, do that without the tax consequence, and put those funds in other investments and have the flexibility is a really big deal.
Thank you. We have about 20 minutes left, and I want to change a little bit the format of a panel that we've seen and open up some questions to the audience. Anybody has a question for one of the panelists? Please come up.
Yeah, question for Natalia.
Here, come join us. And you are? Andy from Best International Realty from Georgia.
No, from Miami.
From Miami, I saw GA.
Yeah,
Sorry.
GA is the company sponsor. Natalia, I'm one of your newer, I would say, broker within your platform, Propy AI. And I've been trying to introduce it to clients and so on. And I find some certain opposition, some other welcoming the idea. And my question to you is that, you founded Propy, which is going to revolutionize and change the whole real estate and how we do business the traditional way, the conventional way, which is a lot of the process is repeating a lot of time. And with this process that you bring on board, is definitely going to help a lot to the client, to the realtor, and to everybody involved in the process. What kind of confrontation, I don't know what that's the right
Objections?
word. Objection have you received from certain industry? For example, the title company, and now they see you as a competition for what they're doing, and maybe some other entity that they might see you as probably a challenge to what they do, and that definitely going to change their business, the way they do business.
Well, thank you so much for using Propy title and Propy AI, and for your question. So the question is about objections, and obviously there are tons when you introduce a new technology. But luckily, to many of the speakers' points today, we at least don't have to explain what is blockchain anymore and why it's immutable. And we had to wait for those years, especially to bring institutions on board. We don't have to sit for hours and make presentations about Bitcoin, Ethereum, and white paper and whatnot. So one of the objections, I guess, there are some teams that are very focused on their daily job, right? And that's what they need to do, lead generation, service the clients. So they literally don't have time to learn about AI and blockchain. So sometimes the objection is, oh, I need some time to actually learn about it deeper and understand the difference and so on. But when clients try it and see the aha moment, how AI unpacks the whole purchase agreements and builds a transaction for you and feeds this data to smart contracts, they understand, okay, that's where the technology leads to. It's becoming a self-driving transaction. Just like Tesla, it's not really self-driving yet, but you see the path with every quarter updates. So same here, at some point we'll be able to eliminate a lot of human error during the escrow and title process, and at some point it will be truly smart contract enabled process where you don't need a license at all. And we've seen that in Germany with one of the insurance protocols where they claim that smart contracts can cover it entirely without a human intervention. And they were allowed to do the business without licenses. Other objections, I guess, when we sell title company to title company, very often, unfortunately, the question comes about what can you offer besides title services, which I believe is absurd, and we're providing a lot of marketing help and lead generation and education on tech, but overall it should not be the case. Overall, the title service and escrow service should be executed just because it's the best possible service and technology allows to do that 24/7. That's what we thrive for.
How do you deal in states that don't use that are lawyer close and not?
Sorry, say it again.
States that don't use title agencies, where the lawyers do the closings.
The attorney states like New York, Miami is somewhat, it's a mixture between closing attorneys and title and escrow. And closing attorneys normally have title and escrow services in-house, and that's how they make money, not really on the...
And they're able to communicate with Propy and use your technology as well?
Yes, but we don't sell in New York just yet for that reason, because the perceptions of agents and clients is that they have to go to a closing attorney. So we're really focused on the states like California, Texas, Florida, Arizona, Colorado, where title and escrow services...
And you're coming to Michigan.
And Michigan soon,
okay.
Yes. But what's interesting is I'm sorry if I'm not, we have, of course, a lot of objections, and Eric, the head of our sales team, actually here on the first row, stand up. He actually is dealing with objections every single day. So I may not cover all of it, but I think like the main one is just, explain more about AI and blockchain and why you use it. And I wanted to add something. What did you just ask, or?
No, you answered.
No. Yeah, so those states, and hopefully by the end of the year, will go national. That's our goal. The point that I wanted to mention is about institutions. We have some of the largest real estate and mortgage-related institutions that are coming to us this year, since December. And they are asking us to spend time with them, how we can bring their hundreds of millions of assets on chain. And 3-4 years ago, we were those pursuing them and knocking on the doors and trying to convince them to make a proof of concepts. Now, they really want to get rid of title insurance. It's a $25 billion industry that is necessary to provide the escrow itself and clean the title, but the insurance itself, I don't want to get into like many details, but insurance itself is really adding to the issue of housing affordability in America. And we've seen that with the Biden administration recent insurance waiver, which is just a Band-Aid. But we are actually doing this solution to address affordability.
Thank you. Do
Sorry
we
if
have
it was too
more
long.
questions? Yes, we do. Come, introduce yourself. Barry.
Yes. Hi, my name is Barry, and I'm with Roundtable Media and the Street Crypto. I'd like to ask you a question to the gentleman that's the broker-dealer. Quick question. What do you see the difference between being an STO and a Regulation D offering and using a utility token in a Regulation D offering in additional membership units and or shares? And then the second part of my question is, where do you see the market going for STOs, or up and or down in the next few years, or do you see Regulation D staying stable and or going up and competing with STOs or Regulation A pluses?
Interesting. I'll take the...
There is a few security lawyers if you need help.
Well, let me say this, that there is the Reg D 506C is something that's been around for a long time, and I go to broker-dealer, independent broker-dealer meetings on a regular basis to inform them of security tokens, STO, because I realize that many broker-dealers who've been selling securities for over 25 years did not know that the SEC approved security tokens in 2018. And so what I do is try to get them to merge in the security tokens alongside of their standard Reg D 506C tokens, so that they provide their audience of investors with an option to purchase two different types of shares. In some cases, we have clients with funds, and the fund will be split into a Class A and a Class B. Class A being traditional securities, 506C, non-digitized, and option B would be the digitized security. And so now they can go to either their client who may be a senior who only believes in having a piece of paper in his hand the old-fashioned way, and he buys the Class A, or if he's talking to that person's son or daughter who's now inherited that wealth, and we know that there's about $160 trillion being passed on to the younger generations over the next 10 years, that they have an option to buy the same type of security, but this now digital share they can store in their self-custody wallet, and they can sell 24/7. And so given that option A or option B, people make a decision. And I think that you're starting to see, or at least the broker-dealers are telling me they're starting to see demand for that liquidity option, because it didn't exist before, and it makes a lot of sense. So if you're going to be, we tell the same thing to institutional investors. If you're going to buy a Class A property, like I said, in major cities around the country, and it's locked up for 5, 10, 15 years, you might as well think about buying the exact same product that has a liquidity option, because let's say the COVID comes around again, and you're in the hospitality industry, you might want to get out, because if you don't get out, it's going to just keep, may go straight down. So people like liquidity option, and I think that's something that we throw out there right now for the world to see.
Who's a security lawyer in the audience? Raise your hands. Can we get a free advice? You want to come on stage and comment on this? He shoot it right? Good.
I hope so.
Any more questions for the panelists today?
Well, he asked about utility tokens, and there's a big difference. I don't see utility tokens
Or
being...
security token here.
Yeah, well, he asked about utility tokens, but...
I know,
yeah.
I'm joking. No one more for questions? Going once? Going twice? Sold. No more questions from the audience. So let's go back to the panelists. Please feel free to choose a subject and present your company, the plans, or anything you want on your company. We have 11 minutes to divide in 4.
You know, one thing that I don't hear talked about a whole lot is different use cases for tokenized real estate outside of capital raising and trading on secondary. And as exciting as all of that is, and we've talked about liquidity being the holy grail, I think there's some other really cool use cases that people don't think about. For example, I do acquisitions in real estate and have for 2 decades. And almost never can I get my team or my staff involved in ownership in these projects. So they get excited and they get bonused and they get paid well, but it's a whole new perspective when they can actually participate in the ownership of the projects. And that just kind of narrows that socioeconomic gap that we get when those that have assets versus those that don't deal with issues like inflation. Or another way to look at it is imagine a world where tenants actually have some ownership in the apartment buildings that they live in, to where right now or yesterday, every 12 months, and they get a rent raise, and we've seen the fallout from that. Imagine now that they actually participate in that at a certain level. So those same type of things can go for solving estate planning issues and things like that. So the fractionalization that's available with tokenization has some very cool use cases besides just raising capital or trading on a secondary market.
It's fascinating what you said, to give the opportunity to a tenant to be able to buy tokens. It was one of the reasons why Jean-Marc and I created RealT at the beginning. Unfortunately, most of the tenants don't qualify as a accredited investor, and makes it very difficult. But hopefully that will change in time.
Yeah, under 144, as the secondary markets do come to life, then they will be able to purchase and participate in those buildings.
Well, I also want to say that, you know, one of the major benefits of security tokens is that it's global now. It opens up the whole world to be able to buy into securities and buy into high-quality real estate where they never had access to. And, you know, Reg S, which are foreign investors, were able to sell. The requirements for Reg S are much lower threshold than requirements for U.S. investors. So Reg S investors don't have to be accredited.
Yeah,
Reg S investors have to be, they just have to go through KYC. So, you know, we are selling projects in the Middle East that we hope the whole world will buy into, institutional as well as private. And you think about countries that are, you know, suffering from hyperinflation, to be able to buy a project that Mitch has that's kicking off 12% annual cash on cash when they're having 26% inflation, and it's pretty low risk because his clients are pretty much, you know, AAA rated. That's a great opportunity for even a government in a foreign country to manage their treasury with an asset like that. Then you look at countries like El Salvador, who are based on Bitcoin as their primary dollar denomination is based on Bitcoin. They came to us and said, look, we want to diversify. We just can't have everything trapped in Bitcoin because it is still volatile. And therefore, they want to be able to convert a lot of those assets into real estate assets so it stabilizes their economy as opposed to just having it ride on one volatile currency.
We actually dropped this idea on Twitter. How about a renter is able to mint their home address on Propy keys, and whenever this property is being obtained by the real owner and they sell it, the renter can get a royalty fee. Because we want to incentivize the renter to actually have the stake in the game and take care and maintain the property, so at some point when it changes hands, they have a small piece of it. And it was...
paid in Propy token.
Of course.
Of course.
Of course, in Propy token. And of course, this idea was really taken very well by the community. Everybody was like chatting, tweeting, reposting, and so on. But overall, my kind of wrapping points here is that the real estate on-chain category is on the map, and it's starting to grow this year. We've done so many inventions in fractional ownership, funds in real estate, NFTs in real estate, addresses in NFTs, smart contracts for settlement. We had a proof of concept with a county that is recording entirely on-chain. So many inventions and proof of concept have been in the space. Now with BlackRock, ETFs, and whatnot, we know that money now is on-chain. It's a proven concept. Bitcoin, after so many years, proved it's decentralized, it's immutable, it's working. Now it's time to put the most valuable asset in the world, which is real estate, on-chain. And it's the right asset to put on-chain after money because it's immovable. These are walls that are immovable. Yet the ownership itself, it really behaves as a digital asset. It's a record in a database. Today, nobody keeps it on paper. It's always the database, but the database is very outdated. So it's time to put this property on chain and make it detached from government at some point. Government would track everything, but we should turn this asset into seizure-resistant asset so that after money, the next property rights, which is real estate, really become the foundation of capitalism and democracy.
I totally agree. I'd say the biggest thing is, the institutions are getting involved now, right? My father spoke this morning in London at the FT Crypto Summit, right? And it was about tokenization, and he spoke with the head of, he spoke with the head of Goldman Sachs. And if you told me 2 years ago or whatever that we'd be talking to Goldman about tokenization, I'd be like, there's no way, right? Now it's here, it's real, they want in. Everyone wants in. It's just they need the right assets to be able to do that. And it's kind of a chicken and an egg situation now. Everyone's talking about it. Everyone's like, it's great ideas. And it's just who's going to do it first with scale and who can repeat it with scale is going to be the biggest thing. And especially in the real estate world. I mean, look, this is the most archaic industry out there, right? You touched on title insurance. I think title insurance will be completely gone in 3 years with blockchain, And in the conversation with our title insurance lawyers, they see that too. And, they see in the future kind of come rolling in quickly. And again, it's about being on the front edge, right? 10 great ideas, 2 stick, but it's continually doing that. And I think we're starting to see a thinning out of the bad actors in the space. The institutions are starting to see that. You're starting to see institutional rails be brought in. You're starting to see regulation come in. And it's a slow process, but it's going to happen a lot quicker than pretty much any other technological revolution we've seen before. So we're excited.
Thank you very much. I want to thank all the panelists for this great conversation. We could see very different vision, different views of tokenization, different use case as well. I wish every one of you luck in your ventures and your new projects. And I hope that next year we'll have the chance to speak again and see where we're at. Thank you, everyone in the audience. Have a good day.